Welcome back to another episode of Unmuted. Today I'm joined by Allan Samson, Executive Vice President and Chief Broadband Officer at T-Mobile, for a conversation about what it really takes to scale broadband in the US right now. As fixed wireless and fiber expansion accelerates, operators are facing tough trade-offs around spectrum, network capacity, rising costs, and the economics of reaching the edge of coverage. We'll discuss the operational realities of competing with cable and fiber incumbents, the role of policy and funding, and the biggest under the radar risks that could shape broadband growth over the next few years. Allan, thank you so much for joining me.
Yes, of course. Nice to meet you, Catherine.
You as well. So, where are you feeling the biggest constraints in scaling broadband today are? Like, is that spectrum availability, network capacity, economics?
Yeah, it's a great question. Well, the good news is we don't feel a ton of constraints. T-Mobile's continued to push forward on a kind of a multi-technology approach to that. But I think generally in your question, you're trying to balance the economics, the capacity planning, and an evolving customer need set. For us, we're seeing very, very strong demand, and we've approached it with a fixed wireless product, which is super flexible. It's broadly covered. I think we cover 80, 90 million homes in America with a fixed wired signal that can deliver internet. And we've got various trade-offs that we make there in terms of protecting our wireless customers and making sure that our fallow capacity is high performing for our internet subscribers, as well as our recent investments into the fiber world. Their deployment takes a bit longer. The economics are a little bit more heavy, so you got to make sure the math all pencils out, but it provides us a faster product and something that will meet a lot of customers' needs as well. So for us, it's not a one technology solution. It's making sure we go to market with both the fixed wireless and the fiber, give us a speed to market and coverage advantage with the fixed wireless as we follow up with a build out on the fiber side.
Yeah, I mean, fixed wireless is a really exciting opportunity for operators and for consumers. But as fixed wireless scales, where does it start to stress the mobile network? And how are you managing the trade-off between mobility and home broadband traffic?
Yeah. Great question. Well, first, it's important to remember that fixed wireless for T-Mobile is a fallow capacity model. We talk about it everywhere, and I think people have a rough understanding. But through our Sprint merger and just through the tremendous spectrum assets that we have, we're able to look at a sector by sector basis. And I think we have like 13 million sectors across the United States, forecast the demand of mobile traffic, not only how many mobile customers, but every year mobile customers use a little bit more. We build all of that into a long range demand forecast, and then we take the spectrum that's left over and we allocate that to our fixed wireless product. Some people thought in the early days that as we get more and more fixed wireless, the experience would degrade over time because it is a network that more people are using. In fact, the data says quite the opposite. In the last 2 years, our fixed wireless base has grown by over 80%. I think we're announced in our last earnings call about 8.5 million fixed wireless customers. The usage of our customers over the last 2 or 3 years has gone up about 30%. So the average American home is demanding more and more. And yet, despite more customers and more demand on the network, the performance that we're delivering is up 50% when you look at average download speeds, upload speeds, and all of that. So this fallow capacity engineering planning model is really working well, even though we continue to grow at a great pace. Every year, the experience we're delivering is better than the year before. And so we're really excited about that.
Okay. Yeah, that's interesting to hear because I've definitely heard this idea of the more fixed wireless, the worse the service. So it's nice to hear that that's not
Yeah,
what we're seeing.
the model safeguards against that as well. Every person, with all internet providers, you type in your address and we qualify to see if we can serve you. Some of our sectors, through incredible demand, have in fact sold out. And at that moment, we stop selling customers to ensure that every customer gets a superior experience. We don't oversubscribe such that you're going to feel a real degradation in your experience.
Okay. And what are the hardest operational lessons you've learned competing head to head with cable and fiber incumbents?
I love the question. The hardest lessons, I think really the way T-Mobile has thought about internet has been really like we think about all things. What are the current pain points? What's the problems that the industry heretofore haven't really solved? And when we think about both our cable and our telco competitors, they've been at it for 20 years and they've kind of been able to define the experience through their lens, which has largely been what's the download speed and what's the price I pay today. They've defined it a little bit around some ancillary fees, charging for installs or routers or modems or whatever. And they've defined it in a pricing model that over time a promo expires and your bill goes up. And if you need some support, maybe the way you dial in or wait for a technician to come to your home. All of this has been a part of the American internet experience, but frankly, many customers were voicing that just doesn't work for them anymore. So we approach it in solving the pain points. Our product is priced with a price guarantee, so we've not raised rates on our internet product and don't intend to do so. We have a model that we can give you a router, either ship it to your home or you pick it up our store. You can install it in less than 5 to 10 minutes. No need to wait for a technician. If you need help, we have an amazing app that can help you. Our call centers that answer the phone quickly. And we just give customers certainty. There's no ancillary fees for all the extras that go along with that. What we've seen in the demand is not only is the product meeting customers' needs, but we have the highest net promoter score as measured by HarrisX and JD Powers. People love the internet product, but really they're really voting with the experience. This is the way we want to be treated, and we solve those pain points. So what we've learned again is just to really study what customers want, compare what we can provide versus others, and really differentiate and hopefully win in the marketplace based on that thinking.
Yeah. And like it's no secret that you guys are doing really well in this market. But then you have things like rising equipment costs and energy and site costs and all that stuff that just is affecting everyone, right? No matter how how well you're performing. So how do you factor all of that into your expansion plans right now?
Yeah, you're right, Catherine, to highlight. Costs are going up in really every industry, whether it's telecom or manufacturing or other things. And so we're very keen to pay attention to it. I think we have a little inherent advantage in fixed wireless in that when it's fallow capacity, you're not spending net new engineering dollars to create capacity. Therefore, you're a little bit less burdened by changes in engineering costs because we're using a model and a capacity that we've already got. That's an advantage. We really have a tremendous partner ecosystem. The folks that we work with to produce our fixed wireless routers have done an amazing job of getting ahead from a supply chain perspective. But it's just diligence that T-Mobile does, and I imagine others do, to make sure that we have certainty around our cost structure. Ultimately, though, I think we look at it as the customer that I acquired 3 years ago under the relationship that we created and the price I offer to that customer, the cost to that customer really haven't changed. Maybe somewhere down the road, a new rate plan for a new customer who comes in, perhaps that rate plan changes a little bit and we offer a new price to that customer, but then that price becomes their price for their time with T-Mobile. And so it's really, again, valuing that transparency and honesty. I think where people get it wrong is they go back to loyal customers that have been with you for years and years and years and say, our future costs are higher, so we're going to take a product that you've enjoyed, that we've essentially paid for, and raise your rates. That's math that we try to be very, very careful with. Fiber is a slightly different situation. You've seen our approach to fiber is work with some best-in-class builders out there, partner with them. The capital light infrastructure that we've put together sort of insulates us a little bit in the near term from some of those cost pressures. So all to say that each technology has its advantages and its concerns. Great work with our partners and our ecosystem really help a great deal. But our commitment to customers is that we don't want to change the deal on you. We want to keep your deal fair and consistent so that you're not burdened with the changing infrastructure costs that are going up.
Okay, great. And where do current broadband policy and funding programs help operators, and where do they create friction or misalignment with what you guys really need?
Yeah, I think your question maybe is alluding to some of the programs that have come along to either subsidize or help the build out of certain things. In general, like I love the intent. In America, you have to have broadband access, and that product needs to get better every year as the demands grow. And so I think as an industry, as well as regulators who say, how can we increase that capability for every American to participate? I love the sentiment. I love the place from which we're trying to solve the problem. I think where we have to be careful is politics getting involved or various constituents sort of hard coding one particular answer. The best example is fiber. It's great that there's some economic incentives to go build fiber, but you can't let that kind of make you stupid in the sense of if it's going to cost 50,000 to reach someone with fiber, but it could cost maybe a tenth of that to reach them with a really good fixed wireless product, maybe the solution and the investment needs to have the flexibility that we're still doing the economically right thing. Economics are economics, whether you're a regulator or a corporation like T-Mobile. So let's make sure our policies give just enough flexibility that we can reach the most Americans with the most amount of money, but make sure that each individual build is smart and takes advantage of all the different technologies we have. I think that's really our message, is to make sure that we're flexible. And we're seeing that a little bit out of the FCC now, where whether it's satellite technology, whether it's fixed wireless, fiber, that there's an openness to do the economically rational thing as we push this product to more and more Americans.
Yeah. And speaking of flexibility, this is kind of also a flexibility question, but more on the technical side. Like, what factors guide your thinking around when fixed wireless is the right tool and when fiber or another technology actually makes more sense from an operator's perspective?
Yeah, I love that because there's an answer from the customer lens and there's an answer from the operator lens. From the operator, obviously, at the end of the day, we need to bring a product to market at a price that customers are willing to pay. And when the economics of fiber or fixed wireless sort of push you past that point, well, then you've got to look for a different answer. Oftentimes, fixed wireless is an answer where maybe a fiber build is just too costly. And so, we really do make the economically rational decision. Not so much that we can maximize the profits for T-Mobile, but we certainly are a for-profit company. But we want to make sure we can guarantee that value to the customer. If I sell my product to you today at $40 or $50, I want to be able to honor that price 3 or 4 years down the road. And that requires that you do the smart work in your business case and your build cost to be able to enable that value to be an ongoing value to the end user. From the customer perspective, we really see these products as very complementary, not competitive. The multi-teenager household, maybe with a parent or two working from home, they might demand a higher throughput that fiber can provide, that on the upper end of fixed wireless, it may fall a bit short. In other households, they may be very economically constrained in their monthly budget. And so fixed wireless is an amazing product and typically comes at a price point a little bit lower than fiber. And so from a customer perspective, we hope to give them the choice. And really, it's about having 2 or 3 products in your portfolio so customers can get the one that best suits their needs and their wallet.
Okay. So my last question is kind of a big one. What is the
Okay.
so what would you say is the single biggest risk to sustained US broadband growth over the next 2 to 3 years that you feel isn't getting enough attention? Because we're talking a lot about broadband these days, but what do you feel like is sort of being missed in these conversations?
That's a good question. Well, first, let me tell you that in general, T-Mobile and me specifically are very optimistic. I think the environment for broadband in America is really primed for growth, and we've talked about upping our estimates and guides on where we think we can get to because I think the environment largely is working pretty well. But to be specific to your question, I think in the world of fiber, when you put fiber optic cabling in the ground, you have to get permits and you have to comply with local regulation, and that's all done at the municipality level. So individual cities all govern the process, the timing, and the throughput of that. When you're trying to build millions and millions of homes in a short period, that means you're necessarily working with hundreds and hundreds of municipalities. Some are well resourced to respond to your permit and get you into market and building quickly. Some are under resourced, and so your applications and permits can kind of move at the pace of that local municipality and its resources to comply. I think it also, when multiple fiber providers are in a community, it puts the municipality in a tough spot trying to sort through. So it would be a dream of mine that we can think about permitting and building fiber and maybe elevate it either at the state level or the federal level or have a standard set of rules and guidelines. Because I think us, as well as all of our peers in the industry, are sort of confronting the complexity of every state, every municipality
Yeah.
having a different set of guidelines. And that's just going to it's going to naturally slow down the fiber build out. From a fixed wireless, for us, it's what we talked about earlier. As long as there's a fair environment to get the investment you needed to reach customers with the best possible solution, that if that environment's fair, T-Mobile really likes its chances. If various regulation comes out that favors one technology over another, that can be a bit of a headwind if you're not in the winning side of that debate. But other than those couple of things, in general, we're pretty bullish about the opportunity.
Okay, perfect. Alan, thank you so much for taking the time to talk
Yeah,
to me.
great.
Yeah,
Great to talk to you. Appreciate you covering the space.
yeah, thank you so much.